This week is going to be critically important for equity markets, for crypto markets, and even the bond market and the US dollar. All of these things are at critical inflection points, some would say resistance levels. And depending on what happens this week, you could see a continuing 2023 bull market, or we could slip back into that bear market and soon retest the lows, guys. So this is going to be a very important video. If you own crypto, if you own stocks, if you own bonds, you want to watch this video in its entirety. And if you do, and if you learn something, or if you just like the markets and you want to stay up to date with everything that is going on, hit that like button and subscribe to the channel. First things first, I think it's appropriate to start with the technical overview of the S&P 500, because based off of what we get as far as data and as far as earnings this week is going to set the S&P up very nice on a technical basis, and it comes down to where the markets are currently at. So for a little bit of a backstory, we have had this descending line of resistance for a while. This is showing you are in a prolonged downtrend. It's up and it's down, but ever since December, really November on the NASDAQ of 2021, you have been in a downtrend, in a bear market, but you can get very aggressive bounces, in which we are in one right now. Ever since hitting the lows in October, you have rallied back quite aggressively. Well, if you break above this line that we have drawn right here that has got confirmation after confirmation after confirmation, well, you're going to be setting us for another massive bull run in 2023. The rally would continue for a while, and depending on what we get this week, you're going to either break above that or get rejected at that yet again. You are literally on that line right now. On Friday, you closed on that line. So I hope you can see the importance of this alone. Now, the data and the earnings are going to be what sends us lower or sends us above this line and into another bull market. And like I said in the preview of this video, if we get rejected from that, you could soon hit fresh new lows for the S&P 500. The same thing is true in the crypto markets. This is a chart of Bitcoin, and you have now recovered all of the loss that we have seen ever since the bankruptcies from FTX and other crypto exchanges that dropped the price of crypto from about 21,500 down to about 15,000. You have rallied 26% since January 1st, and you're now at a very important technical level around $21,300, and it's been fighting at this level for the last couple of days, in my opinion, waiting for that confirmation again from the equity markets, from the data and from the earnings that we are going to get. And obviously here, crypto is not directly related or correlated with earnings in the S&P 500, but it is correlated with how people move their money, and depending on what happens with earnings and economic data, they can move in and out of crypto. And I think it is absolutely no surprise that crypto and the S&P 500 are both at a critically important resistance level. I don't think it's a coincidence. Now, we're going to get into this data and these earnings. We are going to start with the earnings because I don't think the earnings will be nearly as important as the economic data, so I do want to take a larger focus on the economic data for this week. Now, tomorrow in pre-market, you are going to get Morgan Stanley and Goldman Sachs. These two banks, they can move around the markets. By and large, they're investment banks, so we don't expect their numbers to be too great considering 2022. I mean, the start of 2023 has been pretty good, but Q4 of 2022 was not too great. So I don't think the markets are going to be surprised when those bad numbers do come out. Tuesday and after hours, you have United and Interactive Brokers. Again, I don't think those will be huge as far as market movers. Wednesday pre-market, you have Charles Schwab. Wednesday after hours, Alcoa, Kinder Morgan, and Discover. Believe it or not, Discover is a big player, obviously, in the credit card business. So depending on what their default rates look like, depending on what their balances look like from customers, that could definitely move the markets in a big way. And that's one that I will be watching very closely Wednesday and after hours. And then you kick off Thursday morning with P&G. And a lot of other random names, a lot of names that you are not invested in, that you have never heard about, are going to be reporting this week as well. And then Thursday and after hours, Netflix. That's going to be the big one, because Netflix is highly regarded in the investment space as being this growth machine, a bellwether for subscription based services, in which a lot of the market has started to become subscription based, right? A lot of the S&P, if you look at YouTube Premium, or you look at even Snapchat has their own subscription service, or you look at Apple, right? Their services, people want to see recurring revenue, these subscription services. So I think Netflix could be very important for that. And as we went over in the last video, the S&P 500 earnings per share for 2023 are expected to grow 4% to about $228, up from about $221 in 2020. So if you start to get Q1 earnings that come out that are not looking like we're going to see that 4% growth, that's where you could get a lot of fear in the markets. And it could come at very short notice, because analysts have very high expectations for earnings and for actual profits. So if that starts to get a little bit gloomy, or a little bit more in that gray territory, like, is it going to happen? Is it not going to happen? You will see that discounted in the markets. And I think it might start with Netflix, and then not this week, but next week, you're going to get more tech stocks, and those will definitely move the markets in a huge way, guys. So that's it as far as earnings from what we know of. There's obviously more companies. These are just the most well-known names. Now, as far as the economic data, this is where the markets could get their big move from. And on Tuesday, you have a 3-month bond auction, a 6-month bond auction, and Fed Williams that speaks. I don't think any of these are going to be too important. After all, the markets have not cared what Fed speakers have had to say. They've basically disregarded all of that. Like, the bond market, for an example, is pricing in 1 to 2 rate cuts by the end of 2023. Fed Williams came out the other day and said the bond market has it wrong. We're absolutely not going to cut rates in 2023. And the markets didn't even care. The future probability of rate cuts did not change. It's literally stayed the same. So there's a big disconnect. The bond market and the Fed are playing chicken with each other. One of them will eventually be wrong, and then you'll get that big move, but it's not going to be based off of this week or the multitude of Fed speakers that will be speaking. Now, the first big economic data that you're going to have is Wednesday, and you're going to get PPI month over month for December. We are expecting a negative 0.1% reading. Now, the issue here is we got a positive 0.3% last month, and this is the producer side of inflation, producer price index, and this is month over month. So this is going to be the most important one. You're also going to get core PPI month over month and year over year as well. But PPI month over month and core PPI month over month, those are going to be the big drivers. And core PPI month over month for December is expected to come in at 0.2% of a gain. Last month was a 0.4% gain. So again, we're expecting a lot out of the producer price index, right? We're expecting a lot of deflation on a month over month basis, and we're expecting the year over year numbers to come down in a massive way as well. So I think when you're set up like that, it can make for a disappointment. Or like CPI last week, it came out right on expectations, and the markets really didn't move at all. So it's going to be very interesting. If any one of these numbers are off, that's where you could get those big moves. Now, you're also going to get retail sales month over month for December as well, coming out, both of these data points at 8:30 in the morning. You are expecting a negative 0.4% drop. Last month was a negative 0.6% drop. So you are expecting the drop to not be as bad. It's still a drop, but going from negative 0.6 to negative 0.4. And I think this is key as well, that not a lot of people are going to tell you about, but retail sales month over month falling like this is interesting because the Atlanta Federal Reserve expects the GDP report to come out on January. It says January 10th, 2023. The last estimate was 4.1%. We're expecting a reading of 4.1%. And retail sales are dropping 0.5% month over month. There's a disconnect there. And one of them is going to be wrong. So either way, that might not be a positive thing for the market. So that's what you got as far as Wednesday. You got more Fed speakers, Fed Bullard, Fed Bostic, that speaks at 9 o'clock in the morning for Fed Bostic, Fed Bullard at 9:30 a.m. He is no longer a voting member, so it's not going to be as important as what to the markets from what Fed Bullard has to say. Unlike in 2022, when people heard Fed Bullard say some crazy she's, the markets would fall like a rock. You do get the Fed Beige book at 2 p.m. as well, which is basically how the different Fed regions are seeing economic activity, seeing labor, all of that, like Philadelphia Fed, Chicago Fed, San Francisco Fed, Atlanta Fed, right? All these different regional Fed banks give their own assessments of what is going on. Fed Harker at 2 p.m. as well, Fed Logan at 5 p.m. So Wednesday is going to be a jam-packed day. Now on Thursday at 8:30 in the morning, you get building permits preliminary numbers for December. I don't think that will be as important. It's not housing starts, in which you do get housing starts at 8:30 in the morning, and that might be a little bit bigger, and you're expecting a big drop for housing to kind of reflect what we're seeing in the price of housing, which continues to fall. As well, on Thursday at 8:30 in the morning, you are going to get continuing jobless claims and initial jobless claims. And initial jobless claims for January 14th, we're expecting 207,000. Last month we got 205,000, so a slight uptick. We want to see if this comes out much higher than 207,000. That's going to be key because we're out of December, right? So a lot of people hire heading into the holiday season. Q1 tends to be the slowest quarter throughout the whole entire year. So once you're getting to the January mark, January 14th, if you start to see initial jobless claims come out at like 500,000 or some crazy high number, the markets might actually not take that bullishly, right? It's all going to depend. Maybe they do, maybe they don't. I don't think a huge beat to the initial jobless claims would be a good thing because we are seeing inflation coming down. And the reason the markets are up right now is because the labor market, believe it or not, the economy and the labor market continue to be strong. At the same time, inflation is falling like a rock. If you were to see inflation still at 4%, but the unemployment rate heading close to 4% or 4.5%, I think that would be a recipe for disaster for the stock market. So there is that as far as Thursday. On Friday, you really don't have anything as well. Fed Harker that speaks at 9 o'clock in the morning. So from what you guys can get out of this video, that Wednesday and Thursday are going to be big data days. PPI, retail sales, housing starts. You're going to get initial jobless claims. You're going to get Netflix earnings on Thursday. And it's going to move the markets. And if you get rejected on crypto or on the S&P 500 at these major resistance levels, it is going to be a very bad sign for the next couple of months in the S&P 500. Because after all, don't forget, the average analyst consensus view is that the beginning of 2023 is going to be bad until the Fed pivots the second half of 2023, and then it's all just going to bounce back and be fine and dandy. But that Fed pivot might not actually come. If you head into a bad start of 2022, it's not going to bode well for potentially the second half, or did I say 2022? 2023. It's not going to bode well for the second half of 2023 as well. Now, my personal perspective is we probably get rejected around this level. You come down, you hit that low. I'm not sure if it's going to be lower than the October low, but I do think you will get rejected, especially once you start to get Apple, Amazon, Google, Tesla, Nvidia, large companies that do report earnings. You'll get rejected. You'll come back down. And then I do think the markets might get a little bit more comfortable once the analyst estimates for earnings do come down and you have a lower bar to beat for the second half of 2023, because right now the expectations are super high. But if those expectations crater, then the second half of 2023 might be easier to beat those expectations. And once you do get another drop from here, you get another valuation reset, guys. So that is really what I am looking at as of right now. Some other interesting things that are happening in the markets, specifically with SoFi. As you guys know, if you've been a follower of this channel for a while now, I invest in SoFi, have been investing in SoFi, never sold SoFi, and you are seeing a lot of insider buys from Anthony Noto. And in this market environment where fintech specifically is really up in the air, and definitely a startup like SoFi, when you see this kind of buying activity, and we're going to run through the numbers here in just a moment, you gotta pay attention. So on December 9th of 2022, Anthony Noto bought $3 million of SoFi. On December 12th, he bought $569,000 worth of SoFi. On December 13th, he bought $1.46 million of SoFi. On December 15th, he bought $1.03 million of SoFi. And then on December 16th, he bought $1.38 million worth of SoFi. So this guy is literally like the whole month of December going crazy. Put over $5 million, $6 million. No, 3, 4, 5, 6, 7, roughly $7 million into SoFi stock in the month of December alone. Obviously, he's worth a lot of money, so it's not that big. But even if you're worth a lot of money, you're not going to throw away $7 million or risk losing half of that at this current market environment. You obviously are seeing good things happening with SoFi, and that's like the last period in which he could buy SoFi leading into earnings. You're not allowed to buy if you're an insider right before earnings or even right after earnings. There's a lot of limitations 9 times out of 10 on when you can actually buy the stock. So it looked like he took that opportunity to really load up on the stock potentially before a big earnings release is announced. And that is something that is really catching my eye that people are starting to talk about, is Anthony Noto continues to buy SoFi stock, which is kind of crazy at this point, guys. So that is going to be all for this video. If we do take another brief look at the S&P 500, if you break out above this line, and you guys can mark this video, save it, you could pull this up on your own S&P 500 chart, but if you break this level, your next level is going to be about 430 on the SPY, and that would set you up into a new bullish uptrend for 2023. If you break under that, well, you probably got to target that 350 level at least on the SPY. So this week will definitely give you a glimpse of what's going to be happening over the next couple of months in the markets. That's why this is probably the most important week of 2023, especially on a technical basis. So that is it for this video. I promise that is it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.